Alright guys, my name is Shervin, welcome to my channel. In this video, we're going to talk about the Canada housing market crash and why it may actually be worse than what we initially thought. Now, about 2 months ago, I made a video on this topic where we took a look at how the TD Bank was estimating that the average price of a home in Canada is going to drop somewhere between 15 to 20% in the coming year. Now, since then, we've had a number of other reports such as this one from the Bank of Montreal, which states that homes in Canada are overpriced sometimes by as much as over 70%. There are also a number of reports that many Canadians are putting off home buying at least for the time being due to the crisis, which to be honest is completely understandable. In fact, the latest data shows that the average price of a home right now is more than 7% lower than what it was just a year ago. And given all these reports of doom and gloom, it is well within the realm of possibility that this trend will continue at least for the time being. Now, if you watch to the end of the video, we're going to talk about how you can protect yourself against the market crash and how you can use the displaced market to make money. But before we get into all of that, if you're new to my channel and you enjoy this video, make sure to smash the subscribe button down below and join the community. I make new videos about personal finance and investing on a regular basis. And by subscribing to the channel, you get to see all my new videos right as they come out. Also, if you enjoyed the video and want to support me even more, then do me a favor and smash the like button down below for the YouTube algorithm. But alright, with all that said, let's get right into it. Now, the first thing you want to do in times like this is to change your view on recessions and market crashes. In fact, there is a famous example from Warren Buffett which says that if the price of hamburgers go down, everyone will celebrate, but if the price of stocks go down, everyone panics. Whereas really, you should look at the lower price of investable assets as an opportunity rather than something to be wary of. Because just like how when the price of hamburgers drop, you can buy them for cheaper, you can also invest into all kinds of assets for a discount during a market crash. And of course, this also applies to the housing market where you can not only buy houses for cheaper, but you can also invest into REITs for a discount. Now, REITs are real estate investment trusts and are a collection of tons of different properties. And by investing into REITs, you're basically investing into a slice of all those different properties. So they are basically like an index fund for the housing market and they track the performance of the housing market. So if it goes down, the REITs also go down in value. And again, during a housing market crash is the perfect time to invest into these kinds of assets since you can buy them for a discount and get the maximum amount of return possible. Now, next up is to make sure you have a fully funded emergency fund with at least 6 months worth of your expenses. Now, during times like this, cash is king and it's very important that you have a healthy amount of it just in case. Because again, in a recession, a lot of people lose their jobs or have their salaries lowered for the time being or a lot of stuff like that, which means that now it is more important than ever to make sure you have enough cash on hand just in case anything goes wrong. Now, of course, this particular recession is also coinciding with extremely high inflation rates, which means that the cost of living is going up at a rapid rate. Now, this in turn will mean that what you deem to be 6 months worth of your expenses is probably no longer 6 months worth of your expenses, because again, your expenses are going up so fast. So even if you already had a fully funded emergency fund before all this craziness started, you probably have to top it up a little bit just to make sure you have enough for 6 months. And of course, once you do this, you are not only protecting your investments, but you're also giving yourself the peace of mind that no matter what happens during this recession, you are at least covered for 6 months. Next up is to cut back on your expenses as much as possible. Because again, as I just mentioned, these are the times when having cash on hand is more important than ever. Now, ideally, you should always strive to live on less than you make so that you have money left over that you can save and invest. But particularly during a recession and a market crash, there are a number of different things that can go wrong as well. For example, if you're a homeowner and you have a variable rate mortgage, then the rising interest rates is also going to increase your mortgage every single month. If you're someone who rents, then rents could also go higher in response to the higher interest rates. And of course, this is all happening at the same time as when people are losing their jobs or ending up with a lower income because of the recession. This is why it is so important that at least for the time being, you make some sacrifices and don't spend money on anything that you don't absolutely need. Next up, if you're looking for a new place to move into, then make sure to sell the previous property before you buy the new one. Now, what most people do is they buy a new property before selling the old one, which may not be the best practice, especially given these circumstances. Now again, the fluctuations in the housing market are off the chart at the moment and the prices could dip at any given moment. Which means that if you buy a new place before selling the old one, there is a chance that you may not be able to sell the old one for the price that you wanted to. Which could obviously cause all sorts of problems, especially when you're already committed to buying the new place. So really, when you buy a new place before selling the old one, you're putting yourself in a very risky situation for no real reason. I mean, don't get me wrong, I understand that it might be weird to sell the old place and then still be looking for a new place. That means that you may have to rent somewhere for a little while. But again, just ask yourself, which one would you rather do? Have it hard for a couple of months while you're still looking for a new place to buy? Or would you rather buy a new place and then be unable to sell the old one? Now, I'm just gonna go out there and guess that you picked the former, which I would completely agree with. It is just a lot better to avoid all the unnecessary risk and just make sure that you sell the property first and then buy a new one. Now, last but not least is to be on the lookout for good deals as they come on the market. Again, as I mentioned with the first point, you have to change your view on a recession and a market crash. Yes, things are not looking good. Yes, the times are tough, but to quote ancient philosophers, in the midst of chaos, there is always opportunity. And as I mentioned in the start of the video, we're going to talk about how you can protect yourself, but also use this opportunity to make money. Now, if you've already built up your emergency fund and also saved up cash on top of that, that means you have a lot of capital that you can deploy anytime a good opportunity comes your way. And good opportunities will come during the housing market crash. You can buy REITs for a lot cheaper and invest into them and get the most amount of value. If you're looking to buy properties, they will be much cheaper, and there will be even some foreclosures that you can buy for pennies on the dollar. And of course, there's also going to be much less competition out there for any of these deals. That's because everyone else is too concerned about what the market is going to do next, and on top of that, they probably have problems of their own with their employment and maybe even lower income. Whereas you, on the other hand, you've been smart about this. You've made sure you have your emergency fund, you've saved up cash on top of that, you've lowered your expenses, and you also know that a market crash and a recession is also an opportunity to invest. And unlike everyone else who's going to be panicking about what the market is going to do, you're going to take advantage of the lower prices and invest for the long term. And of course, to close out with another amazing quote by Warren Buffett, be fearful when others are greedy and be greedy when others are fearful. And that's how you will succeed when most others won't. Now that's about it for this video. Hopefully you guys enjoyed that. Feel free to follow me on Instagram. I post there regularly, so if you want to be a part of it there, make sure to follow me there. And as always, if you have any questions about any of the stuff that we talked about in this video, make sure to let me know in the comments down below. I always respond to every single question that comes in. And now with all that said, thank you guys so much for watching, and I will see you in the next video. Cheers.